Welcome to the model of ninth wave. Superior inventions for financial markets using 369 forecasting research and development.
Hello friends, welcome back. Let's review a bunch of options we have been discussing over the course of last few months and weeks. So we will choose CL this time. On CL, as we discussed, we need some higher time frame, a frequency of 19, 36 or 38. So here we are going to use frequency of 19 for CL. ES, I like to use 38. So here, let's see what is going on. Now market is going down, and we found this A, B, and C pivot, and we added our shift pitchfork as discussed, and we also talked about the levels you can have are right here, and we also said we can just do ABC and see how the market is reacting to these levels. And also we discussed the timing module plugged into it by using the handle and the center point, which is, if you remember from high school, mean, medium, mode, right? So what we are tracking all over is the rotation of the market across a sophisticated way to find the mean of the rotation. That is why it goes from these levels to these levels to these levels. This is just an ES chart, right? It goes. Now if I go back and check, long time ago when I discovered this, and we also added these extensions on these. As I said before, green area is of interest. Green area is of interest, right? Green area is interest. Green area, green area, green area, green area. I can't even breathe. So you got the idea, right? So 70% of the chance that market is going to rotate from here. Then we discuss various other ways of beaming through and finding out, how do we qualify which area it is going to stop at. And I think in the recent video I also talked about the frequency between these two. If you're tracking these blue levels and the frequency, you can pretty much pick all the pivots very effectively. Now this is all happening as we moved the price from left to right. But as I said, market moves in spiral situation. It spirals in multiple dimensions. Now if you see from here to here or here to here, right, you can imagine that you're looking at a street and somebody is walking away from where you are, and if you are an observer at this point, as the guy is walking away from you, his height is actually the same, but because of the distance he gets smaller and smaller and smaller. It's just a perception, right? In reality his height has not changed, but the point is we are looking at this compression of height because we're looking at a two-dimensional space. But if you move into spherical space, or we go to even higher dimensions, then we get a lot more. It's not easy to program that multi-dimensional higher dimension matrix programming, but what is going on is structures are unfolding in higher dimensions. So once you map, the principal component analysis is one of those ways to reduce the dimension. When you project the higher dimension matrices into different lower planes, the shapes will change. because it's very hard to compute higher dimensions, right? Multiple dimension, multiple variables. So I want to reduce the number of variables I'm playing with. That's why we get all this impact. But right now, the point I'm trying to make is this: we move from left to right, and this is horizontal balance points in the market. So if I tell you that market is also rotating through vortex, it's like a toroid shape. That means it is moving in one of the dimension is moving in an angular fashion, right? How do we calculate the balance point in an angle? Just to, if market is moving in this direction or market is moving in this direction, right? And we discussed that if that is the case, the market is spiraling through its mean. All right, that's all. Just to simplify that. So the shift gives us that high school mathematics of, or 6th grade mathematics of mean, median, and mode, right? So that's all. Just think that way only, that what value we are detecting on horizontal, we also need to detect the value unfolding in an angular fashion. And that is what this pitchforks are doing. All right. I think we also discussed that, we can curve fit the data. Initially, we need a couple of pivots, and we can curve fit the data to see how the unfolding will take place. So keeping the B and C constant, A can be vertically shifted up and down. So we can curve fit it. So right now, when this was placed last week on 14th, I didn't move anything. So I think we stopped projecting these levels on CL. So I'm gonna bring it back and to soybeans and crude oil. They move very nicely and smoothly. So this is an attempt to see the angular mean under which it is rotating, right? And then we also gave you the timer. If you're doing your homework, the handle and this first median point, and then you move it on like this. Get the top. Move from pivot to pivot. That's all there is, right? So from the bottom, we catch this bottom. From this bottom, we catch this bottom, right? And it goes on and on. And after a while, it will not work, which is fine. We adjust it. From here, we got this top roughly, right? So it gives you an idea where things are unfolding time-wise and price-wise and location-wise. That's all. On the bottom, I have multi-time frame oscillator. When they all compressed, looks like here, very fast, all in same location. You're looking at multiple time frames, then potentially reversal is coming. And now we have a location, we have a time, and then we have oscillator, and we are at one of the probability bands where it can revert to the mean. So it's going to rotate up and down in this mean. See this one here too, right? So CL, I think most commodities will rotate nicely across the means, and they'll pick this direction, that way, week here, weeks here, weeks there, right? So all right, so I think that is clear. So right here, we are the green level. Now it makes sense, right? That it came to this level, it came to this angular, trying to be getting away from the mean, right? There may be some news which could have taken it here, but I think under normal conditions, it will just keep rotating across its mean. And these are some conditions where some panic happened here, boom, 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 right? So if you are caught in that, so you can hedge it, right? If they allow you to get into the options. So anyways, that's out of scope of discussion. You guys know, you guys are professionals. Risk and reward. So that's all there is to be talked about, right? So so keep track. And now the main thing we need to talk about is that the crude oil, as I said, and then also let's look at the soybeans, right? They all trend beautifully. It has been in a downtrend for a while. So once you identify based on any means, we have already discussed this using VWAP 160, 200 VWAP averages. I'm just coloring this because it is below those two averages, that's all. So when market is in a downtrend, so you want to take short from these blue areas. Well, it comes back to it again, short it again. Comes back to it, short it again. Now if it is open here, then it will go to the previous ones, right? We don't know which one. That's the way we use oscillator. It says overbought. We should be able to short that there, right? Because the momentum is moving on the short side. Now if you put an angular shift here, same thing will happen. We can detect all this. Same thing, it pulls back up, goes to this level. Somehow there's interest because there's overlapping areas of interest from the banking side, and they are just using this as a reference rule-based systems. Short again, right? So when we are saying long or short, now you have a bias where you are saying I will bias it short side. Commodities have limits. You can get stuck in a limit, so be careful. But I think you can hedge it. Find a way to do it. You can also do inter-commodity, multiple commodities pegged against each other. So those are all technical trading. But as the trend was down, shorting at these levels, shorting at this level, shorting at this levels is a pretty good idea. So it is not able to rise above these levels to the higher green levels where they are typically reversal areas because the trend is severely down. When you're on the long side, well, so when you're on the long side, you just want to take one direction. So the issue happens when the trend is shifting, right, at the edges. So it should be part of your plan that, hey, every 5 trades I will lose 1 and I'll win 4. That's a tactical move, right? All right. But how do you enter more effectively? We have banking bars entry system. How professionals do it? That's a private system. Only few people know about it. People who work for the bank and who get trained in that system model. It takes 3 to 6 months to really learn those 5 system models. I think 3 months at least. So anyways, so this is a 160 and 200 moving average of VWAP. VWAP is right there, which is colorful, and this is another average, 33 period average, right? So it gives an early signal. But the point is pretty simple, that these commodities or any future commodities or index futures, they all react to these same things. So we can put shift here. Natural shift goes like this, right? And we're gonna go long. So what are we gonna do? We're gonna just keep this, as we discussed earlier, A and B pinned, and I'm gonna lift up the A handle where I can curve it, this at least the blue line. Now it gives you the context that hey, we are on the green level, and also the sideways I'm at extension. The blue is I think 160, 1.618, the famous 1.618, right? And then we have high probability of turn because oscillator at this location. First find the location. Oscillator is now telling me it's overbought as well, right? When it is stretching to the extreme, and down it comes. Now we also get a context that hey, this green is strong because we are way out of these bands. It'll try to go back to the mean unless the trend changes, right? So now you can see it finally crippled itself all the way. Boom, boom, boom. It's like very highly crippled. The buyers were not able to really push it very aggressively, but it creeped in slowly. It was so it came back to the mean, which has green level again, and at the mean came down again. Okay. You can also look at some frequency. Okay, so recent past month and a half. You look at the frequencies from high to low, as we discussed in the video. Put it on the top of the next day. What do you get? Precise entry at green level, right? So if you track these blue levels day by day, in month or two, you will have an inventory on your side. And then I just showed you what to do with the frequency. Now we found this frequency. Now there could be other frequency, maybe shorter frequency, right? And then we just keep using this frequency, and say, hey, where are we going? Where are we going? Right? So it gives you an idea where are we hitting. So if we go from there, it told us, hey, from this guy, just mark your lines. It's gonna come here, and it does. It goes back here up 15 points. So the same logic is going to get applied. So let me So we talked about shift, we talked about moving average, we talked about doing this on a Renko. Now measured moves, as we talked about earlier, right? Measured moves. Now this is another big frequency, so let's track them from high to low, consecutive days, and we track it. Unless we need to track those two frequencies, right? And then we will see where things are going. So we can larger ones like these. We have. So we got that the market is going to be attracted to this level. Let's make it bigger. And as it goes up and down, we just keep it, right? Now this is the highest point reached. That's why I kept it here. This is the highest point reached here. I'll keep it there. The market is going to come. There are a lot of rules. We only talk about it in private sessions, but you can just still use it, right? There's nothing wrong. This is very large swings. Now if I go and pick the smaller swings, so I will have to find another small frequency. This one looks like a second largest frequency among the recent operations. Market. So small swing, boom. Okay, right here. Now small and big come together, boom. Right, edges. Then put it on the high also. Retest, same thing. Okay, unless a new frequency is found, we'll keep the same frequency. So we are trying to detect big turning points right from here. Now this one from here, a small blip, but it did react to it, right? So from this guy and here, reacted to it. So it is in, if you like this, right, for swing charts, everybody should know this, right? If you're trading, where the turning points are. If you more time is spent on preparation than actual trading. So not only you're putting at the lows, we also can put on the high pivot also, right? So that's what we have been doing in ES as well. We did it for 2 weeks. Today you should have seen also it smacked down exactly from that on ES. So we got this, right? So and then we put it on the top. When the market is going to the top side, I want to find the bottom. So I think you can make sense what I'm trying to say. So I'm just looking at the measurements. So in this was the biggest one and this was the second biggest one. So let's mark it, right, from high to low. And then put it on the top. Small ones, I'll put it on the top. I'll keep on moving to the recent, right? And this, now these two are colliding together, gives a beautiful reversals, right? Got a reversal here. We already went through the last video on ES. I think I'm just doing it on soybean because these are natural laws. Market generated, algo generated, bank level generated ideas, and they will never change the rest of your life if you get the right coaching and right software, and then you have to work on it. Working on the right things is critical. And this is the reason why these people show up where they show up. It's not a fluke, right? They know what they're doing and they are managing big money for a reason. So I think that's it. From here, the low to the high. So we are just trying to add probabilities in our favor. Yeah, I got that. Let's put it at the bottom. Put it at the bottom. Got some swing. Now we have green and this, right? So everything will react with 1 or 2 tries. It will react exactly as we know. Now you're understanding the depth of this. Now we can do the beams also. We have discussed all those things. Just wanted to review this again one more time. And if you do your homework, if you have been watching and doing, this was all predicted earlier. This is now the end of the height. If you do your frequency. All right, thank you so much. I appreciate it.